Hey everyone, it's Lara Rockefeller here with Mortgages Made Easy, powered by Premier Mortgage Center. And I wanted to do another video in my Back to Basics series. And today we're going to talk about interest rates and what that means to you. So that is one of the most common questions I get is, what's the best interest rate you can get me? What is the cheapest interest rate today? And just basically what's the lowest rate possible. And yes, obviously when you're thinking about making your monthly mortgage payments, having a lower rate is something that yes, you would definitely want. However, it's not the only thing to factor in when comparing mortgages. So most people call and they say, what's the lowest rate that you can get me? So when I get that kind of question, I mean, yes, I definitely want to try and get you the lowest rate, but just because I have access to those low rates doesn't necessarily mean that you're going to have access to those low rates, because each mortgage is done on a case-by-case basis, and it factors in things like your credit score. So you need to make sure you're making your monthly commitments, keeping your credit score high in order to have access to lower rates. Also, are you going to have mortgage insurance? Because a lot of times lenders will give preferred rates to insured mortgages. So that's when you're not putting 20% or more down as a down payment. If you're under 20%, you have to have it insured. Lenders like that because they have that added protection with the insurance. So yes, by putting lesser of a down payment, you're paying more because you're paying the mortgage insurance, but sometimes you get access to lower rates. So there's lots of things to think about when comparing rates, and just that low number isn't necessarily the only thing. Another thing to think about is penalty. So I know right now, and when you're thinking about purchasing a new house or doing a refinance, you're not thinking about moving, but life happens, and sometimes we don't know where we're going to be in 5 years. And sometimes we move during that time. So if there's any possibility of you're going to be breaking your mortgage early, maybe to do a refinance, or like I said, maybe you're moving, buying another house, you want to definitely be looking at what they're going to charge you as a penalty to break that mortgage, because it's not always the same. So we want to make sure we're reading that fine print. So some lenders will charge you only 3 months simple interest, so 3 months interest, and that's your penalty, where some will charge you interest on the interest differential rate. So what that means is, say they gave you a discounted mortgage rate to sign up. So you got an awesome rate, maybe 1.7, but their posted rate is closer to 5% on their website. They are legally allowed to charge you interest on that 5% on their bigger number compared to their smaller number. So when comparing mortgages, it's really important to make sure you're comparing the same factors. You're comparing apples to apples and making sure you're reading the small print, or having someone like your trusted mortgage agent, i.e. me, or someone else that you're working with, to make sure that they are comparing the right thing. So yes, rate is awesome and having a low rate is great. But for instance, in one of our case studies, which I have here, sorry, I should have had it ready, comparing mortgages to mortgages. Sorry. I did have it ready, and then I shuffled my papers around. The one rate that they had posted on their website Anyway, okay, so the mortgage was $400,000. The first rate was 3.09, second rate was 3.04. Both amortized over 25 years. First monthly payment with the 3.09 was $19.12. With the 3.04, it was $19.01. However, the cost to break the first mortgage with the 3.09, so the higher interest rate, is $2,832, compared to the second mortgage with the lower interest rate of 3.04. Cost to break it is $14,364. So yes, definitely you want to be comparing and looking at that fine print when you're comparing mortgages. Check to make sure that there is no administration fees or monthly fees, anything else like that. Just make sure you are comparing the same variables, okay? So sometimes it does make sense to maybe pay a little bit more per month. In this case, it was $11 a month more. So maybe over the whole term of the 5 years, maybe an extra $600, but you're saving yourself thousands in the long run. So it's just really important. Let's have a conversation and talk about what your future plans are, where you want to be, what your goals are in life. Do you want to own rental properties? All of these are such important conversations to be having with your mortgage agent. And it's not just, what's the cheapest rate? What's the lowest rate? So even though, yes, rate is important, but it's not everything. Okay. So if you guys have any questions about that, please pick up the phone, give me a call, or send me an email or a message. Okay. Thanks so much. Have a great day. Bye, everyone.